Greeting to all our valued clients. Welcome to GKFXPrime Analysis and Education YouTube channel. This is Alan Hong, market analyst of GKFXPrime, and I'm gonna share my daily analysis for Wednesday, 28th of June. And so first of all, let's review the major market movement of Tuesday, 27th of June. So the first instruments we reveal is referring to the dollar index, which measured the greenback against a basket of 6 major currencies, and it was little change at around 96.38 now after its shading about 1% on Tuesdays. So the dollar having come under pressures overnight after the US Senate Majority Leader Mitch McConnell delayed a vote on healthcare legislations and hoping to get more support from the Republican senators. So market participants now are concerned that the Trump administration will find it hard to follow through with tax cuts and physical stimulus steps without first getting the healthcare bill passed. Meanwhile, the euro was stood tall near a 10-month high, was fetching 1.1338 after surging 1.4% on Tuesday and scaling a high of around 1.1349, which is strongest level since late August 2016. The euro was supported after the European Central Bank's shift hint the days of the ECB aggressive stimulus are numbered. That really came after ECB President Mario Draghi said at a conference in Portugal on Tuesday that deflationary force had been replaced by reflationary ones. But any changes in the ECB stance should be gradual as considerable. So monetary support is still needed, and the rebound in inflation will also depend on favorable global financial conditions. So traders say the euro could add to its gains in the near terms. And according to Tarek Hochni, the head of sales trading in Asia Pacific for Saxo Bank Group in Singapore, he said that with the hawkish tone of Draghi, we should see European rates moving higher, especially on the 10-year part of the curve, and the euro, I think, has more room to move higher. As for commodity sides, gold price moved off 6-week lows, rose by $4.18 or 0.34% to $1,250.68 a troy ounce after the dollar fell to a 7-month low against rivals, but gains were capped as Federal Reserve Chair Janet Yellen reiterated the need to raise rates very gradually. So Federal Reserve Chair Janet Yellen offered relatively little on monetary policy, but reiterated that it was appropriate to raise interest rate very gradually to a level that is likely to remain quite low by historical standards for a long time. So Yellen noted that inflation expectation has continued to run below the Federal Reserve objective, so asserting that the central bank wanted to avoid a scenario in which inflation expectations continue to slip. In a rising interest rates environment, investor appetite for gold has weakened as the opportunity cost of holding the precious metals increased relative to other interest-bearing assets such as bonds. As for the oil price, it was fell early on Wednesday, down 38 cents or 0.9%, we're at $43.86 per barrel. So it fell lower after a report of rising US fuel inventories underscore concerns that a 3-year-old crude glut is far from over. So oil had recovered some grounds over the past few weeks after falling near 20% since middle of May. But a report by the American Petroleum Institute showed that the US crude inventory rose by 851,000 barrels in a week to June 23 to 509.5 million, compared with analyst expectations for a decrease of 2.6 million barrels. So now we are gonna review the highlighted economic data that released on Tuesdays, and there's only one data released from the United States show the consumer confidence as June was better than forecast at 118.9. So as for today, we can focus on the data that will be released by the United States as well, which including the pending home sales as May, and it is expected to be better compared to previous negative 1.3%, and it is expected to have a grow at 0.8%. So as for the last data tonight is the crude oil inventories, which will be released by the United States as well, and it is expected to be draw more than previous with negative 2.585 million. So now we're gonna have a look in technical analysis, and the first instruments we are referring to the dollar index in 4-hourly charts. So the US dollar was plunged sharply after it's plunged through the both moving average lines, and we can see the both moving average line is remain pointing downward now. So these are the signals to pressure the US dollar to move further lower after the price closed below the previous low of 96.3, okay, around 96.3. There is a very strong support level for the dollar index. So closing below 96.3 may lead it to move further lower in short to medium term. In Euro regions, with the first instruments, we are looking at the pounds against the US dollar in 4-hourly chart. So the GBP USD pair was moved slightly higher and currently hovering below the resistance level of 1.2817, alright, around 1.2817. So referring to the MACD indicators, the both movement line in the MACD is pointing upward now, and the momentum is quite a bit strong, okay. So it is expected to move further higher after the price close above 1.2817 of resistance level. So we can aim for the next target at 1.2871. So in addition with the both moving average lines we show in the chart, which just form a golden cross, okay, cross from lower levels to and pointing upward now. So it is considered signals for the pound USD to move further higher as well. And as for Euro USD pair was breakout from the highest level of the previous trading range, which between 1.128 and 1.113, and currently the price was hovering around 1.136, right? So closing above 1.136, it is expected to move further higher towards the next target of resistance level at 1.142. Referring to the MACD indicators, which with the both movement line is narrowing and almost form a cross that's pointing upwards. So this considered the signals for the Euro USD to move further higher as well. And have a tad in the KVs, the New Zealand dollar against the US dollar in 1-hourly chart. We can see the price was breakout from the highest level of the previous narrowing triangles, and currently the price was hovering around 0.7275. Okay, so due to the breakouts previously, so it is expected to be stronger in the middle to longer terms. Okay, after the price closed above 0.729, then it is expected to move further higher towards the next target of 0.7310. As for the Aussie, the Australian dollar against the US dollar in 4-hourly charts is hovering at 0.7602 now. So referring to those indicators, the both moving average line now remain pointing upwards, but is narrowing. And as for the signals that provide by the MACD, the both movement line is pointing upward as well. Okay, so in short term it is expected to move slightly higher, but for a longer term, it is expected to be traded within a tiny range, okay, within a tiny range, probably between 0.7634 and 0.7572. So for longer term directions, we have to wait until the price whether to break out either side of the range. As for the Asian markets, the USD against the Japanese yen in 1-hourly charts was slightly stronger today morning and currently hovering around 112.29 and heading towards the previous highs or the resistance level of 112.45. Okay, so USD JPY pair currently is remain traded in an uptrend, so it is expected to move further higher after the price close above the previous high or the resistance level of 112.45. Otherwise, it is expected to remain traded between the range of 112.45 and 112.1. And having a look in the commodities markets, the gold price in 1-hourly chart was retraced from the resistance level of 1253 this morning and currently slightly wiggles. Okay, so it is expected to be traded between the range of 1253 and 1245. So in short term, it is expected to move slightly lower, and for longer term directions, it only can be determined after the price break out from either side of the trading range. Okay, so either 1253, then it is expected to move further higher. Otherwise, break out from 1245 of the range, it is expected to move further lower. Meanwhile, the oil price was take a breath below the resistance level of 44.3, and it is currently hovering below the resistance level of 44.3 as well. So it is expected to be traded flat in short terms, okay, until the price was closed above 44.3. Then it is expected to move further higher as a retracement periods. Otherwise, retrace from the current levels might lead to move further lower following the current downtrend, and probably will be fall towards the previous low or the support level of $42 per barrel. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.